Let's be honest, watching Bitcoin's price lately has been frustrating, to say the least. But what if all this sideways, boring action is actually the calm before a massive storm? We're about to dig into some fascinating data that suggests a huge move could be just around the corner.
So here's the big question we're tackling today. Is what we're seeing right now a trap? Is Bitcoin deliberately lulling everyone to sleep, trying to catch all the impatient sellers and bears off guard right before a major reversal?
You know the feeling if you've been watching the charts. The price is just grinding sideways, building a base, and it almost feels like it's designed to just wear you down. This isn't just a pattern on a chart. It feels like a deliberate strategy to emotionally and mentally exhaust everyone, to shake out as many people as possible before the real move.
And you know what? It's working. Market sentiment has absolutely cratered into a state of extreme fear. We're talking about fear levels that we usually only see at major market bottoms. So right when everyone is giving up hope, the hidden machinery of the market might be getting ready to do the exact opposite.
Okay, to really understand what's going on, you kind of have to throw out the old rulebook. The entire game for Bitcoin has changed. The real engine driving the price isn't where most people are looking anymore.
We've seen a massive shift in how this market works. It used to be that the spot market, just people buying and selling actual Bitcoin, was the king. That's what moved the price. But not anymore. Now the derivatives market, especially options, is in the driver's seat. The tail is now wagging the dog, and the spot price is just along for the ride.
And in this new options-driven world, you have to understand the most important players, the dealers. Now, these aren't your typical traders betting on the price going up or down. Think of them more like the house at a casino. They take the other side of everyone's trades, and their number one job is to manage their own risk, which forces them to constantly buy and sell in the market to stay neutral.
So here's the puzzle they're facing right now. Traders have been incredibly bullish, buying up a huge number of call options. The dealers, of course, sold them those options. Now, to protect themselves in case the price skyrockets, they have to hedge. And how do they do that? By selling Bitcoin futures. This has created this massive artificial wall of selling pressure that's been capping the price, especially around that $88,000 to $90,000 level.
And this is the absolute key to this whole thing, that giant wall of selling isn't permanent. It has an expiration date. In fact, we are on a very specific countdown for when this pressure just vanishes.
So the first date you need to circle on your calendar is this Friday, December 19th. On that day, a full 21% of the dealer's gamma exposure, which is just a fancy way of saying the risk from these options, it just expires. Poof, a big chunk of that selling wall just crumbles.
But that's just the appetizer. The main event happens next Friday, December 26th. On that day, a staggering 42% of the entire gamma exposure just disappears into thin air. We're talking about nearly half of the selling pressure that has been smothering the price gone in a single day.
I mean, just look at this. The impact of these expirations is just incredible. The downward pressure that's been sitting on Bitcoin's head is about to fall off a cliff. The wall that's been holding the price down, it's literally scheduled for demolition.
Now, let's tie this all together with what we talked about earlier. We have a market that is already a tightly coiled spring. Sentiment is at rock-bottom levels of extreme fear. Technical indicators are screaming extremely oversold. And historically, whenever you get this combination of factors, powerful upward moves tend to follow.
So when you start putting all these puzzle pieces together, the emotional state of the market, the technical readings, and this massive hidden force in the options market, a very, very clear picture starts to take shape.
So let's just walk through the sequence here. Step 1, the setup. Dealers build an artificial wall of selling to hedge their risk. Step 2, the catalyst. That wall gets dismantled, with the big day being December 26th. And step 3, the condition. The market is already terrified and oversold. So what's the most logical outcome? The path of least resistance completely flips from down to sharply up.
The bottom line from all this analysis is that once that cap on the price is removed after December 26th, a savage rebound doesn't just become possible, it becomes a highly probable scenario. With the main force holding it down gone, the market is finally free to move.
And that really leaves us with one final, very powerful thought. For weeks, we've known exactly what was holding the price down. We could see the wall. But with that wall of mechanical selling about to completely disappear, you have to ask yourself who or what is going to be left to stand in Bitcoin's way.